Hey everyone, hope you're doing well. My name's Drew Creekmur, and this is the Deep Dive, joined by, as always, by John Creekmur, our founder and senior wealth advisor. And John, today we're going to talk about something that I know no one likes, and that is taxes, right? Unfortunately, we all got to pay them.
Yeah.
So we're going to talk about tax planning and tax preparation and what's so important about those, and give you guys some ideas and things to be thinking about as to how can you legally pay less in taxes than what you need to. So John, when you think of taxes, what do you think of when you hear that phrase? Taxes.
I'll tell you what, I think of a lot of things, and I go back for the friends and our listeners that read a lot of different things. And so I know a lot of folks, they kind of go back and they read historical documents, and some people resonate with different ones more than others. A lot of people, they actually go to the Bible for some guidance. And one of the things that we're told in the Bible is to render unto Caesar what is Caesar's. In other words, pay your taxes.
Yeah.
But you're never told to give them a penny more. And so a lot of people inadvertently, man, they make a lot of mistakes. And so they end up paying more in taxes than what they're required to pay. And so it's like, well, you're required to pay, 10%. Why are you paying 17%?
Right.
It doesn't make sense. Now, what we're talking about here, folks, is not having a tax law named after you. Like Drew Creekmur versus the U.S. government versus Drew Creekmur.
Yeah.
You don't want
Avoid
that.
that.
You don't
Avoid
want
that.
that. We're not talking about that. And so you don't want to go there. But what we're talking is making sure you understand the Internal Revenue Code and then making decisions or trade-offs to navigate it.
Right.
And I think the Internal Revenue Code is really written as a voluntary code. It's like, I have to file my taxes? No. I have to pay my taxes? No. What that means is you voluntarily can know the code, you can lay out your decisions,
Right.
and you can voluntarily make decisions, and sometimes they're trade-off decisions, quite honestly,
Right.
to pay less in taxes or more in taxes. Like a decision a lot of folks have made, whether they recognize it this way or not, is that they are working, they have a 401k at work,
Right.
and they say, I'm going to set money aside for my retirement, and I put it into my 401k pre-tax, and so you just made a tax decision.
Right.
It's a retirement decision, but you're saying I'm going to pay less taxes this year, I'm going to defer paying taxes, and hopefully in the future, I'll pay fewer taxes when I pull it out.
Right.
So it's decisions like that. There's always a trade-off. I'm giving up some of my income today to pay less taxes today.
Right. Yeah. Yeah. So John, I said the phrase tax planning and tax preparation up front. And when you talk about people making tax decisions, so oftentimes we hear, well, hey, I talked to my tax man, my CPA, my tax preparer, and they told me to do this. Now, that could be good, bad,
Yeah.
right or wrong. There's a lot of who knows on that. But when we think about tax preparation and tax planning, can you define what is different between those two, but also why it's important that they work together?
Yeah. So you have to understand they're two totally separate things. And however, they work together. And if they don't work together, that's a bad situation. So tax preparation, and that's what people do every spring. So really your taxes are due April 15th every single year. And if you have a business, they have different deadlines.
Right.
And we have different extensions and all that kind of stuff. But really it's the spring of the year. Tax preparation is a recording of history on a federal government document that again gets transferred to a state government document. And so what they're asking you to do is look at the previous year, look at all the decisions that you made, the income that you made, the deductions that you had, the decisions that you made to defer income, not defer income. Write that down for us, sign it, send it in, and then you're going to pay taxes on the recording of history. That's tax preparation. Tax planning is something totally different.
Right.
That's where you're saying, here's where we currently are in this current tax year. Here's where we're going to be in the future years. Let's create a plan to minimize the level of taxes that we pay in this year or over our lifetime. And so preparation is recording of history. Planning is preparing for the future. And the way they work together, you have a quality plan in place, you record everything accurately, it works together, no mistakes, it's seamless. What I see though, Drew, is a lot of folks go to the person that prepares their taxes. Right. They're not given any advice about how to plan for future taxes, and then they end up making mistakes and paying more than what they should.
Right, and a great example of this, we were just talking about today with a client of mine that I'm working with who unfortunately had a loss on a sale of a real estate property, and their tax preparer actually basically said, hey, there's not a whole lot you can do about that. That stinks, but it's not great. Well, we sat down and looked at the tax code with our tax planning team, and we actually discovered, hey, we can use that loss based upon their unique situation to actually do some big picture tax planning strategies to save them money on taxes. And so, John, tax planning is something that we've really been putting a lot of time, effort, resources, and training into. But we've also brought the tax preparation in-house for our clients where we actually can help you prepare your taxes. So can you talk a little bit just about, from a tax planning standpoint, what does that look like for a client of Creekmur Wealth? What are our services? What are our abilities on that front?
Yes, we'll separate planning and preparation. Let's start with planning. And so with planning, we never make a tax planning decision as a standalone decision. Right. So we have to look at, what are your goal objectives? What are you trying to accomplish in the current year and future years in life? What is your big why? What are your goals? Then from there, what are your investments? What's your balance sheet? What's your liabilities? And then what's your inheritance plan? How do you want to disperse funds? What's important to you? Once we have those items laid out, then we can start saying, what are the five fundamental tax planning decisions that we can make? How do those apply to you? And then other 120 other tax planning strategies, which ones of those make sense for you? And then we can start to structure decision points to actually decrease taxes. And so as part of the overall process of bringing things together into one complete, and the word is holistic, which means we're looking at everything holistically or all together, what are the decisions to make to decrease taxes when it comes to actual making planning steps? Through that case you had just mentioned, their tax preparer told them with a $200,000 loss that they'll be able to write off $3,000 a year against their income for the next 67 years. Well, that's just ludicrous. And so we were able to help them work on structuring other assets, structuring other entities to where they'll be able to write off that full $200,000 in year one. Now, every situation is different. They're all unique. But in their situation, we were able to help them navigate the code to make a better decision. That's what planning is. Now, preparation, when we say bring things in-house, we actually are now preparing taxes for clients all across the country. And so we're doing it in-house. We have CPAs on staff. We have partner firms that we work with all across the country. And some are individualized, simple 1040 returns in any different state, in all 50 states and different territories. But also some are more complex. A lot of legal entities, a lot of real estate, a lot of different structures. It's how we bring them together so they all work together.
Yeah, absolutely. And so, folks, what I would encourage you to do, you obviously need to have that good foundational plan, right? You need to have a plan in each of our 4 blueprint pillars. But the tax one, John, it's huge. It is massive. And some of the tax savings we're seeing from our tax planning team coming out, that's generating a lot of savings for our clients, but also enabling them to, in a bigger way, impact their community, impact their family, live the retirement lifestyle they desire, are massive. So, folks, what we would encourage you to do, if you have your last tax return, send it over to your advisor and say, hey, can you do a high-level review for me of my tax return? And then look at my bigger picture financial plan, and let's start talking through those 5 foundational tax strategies. But then let's see if some of the other 120 may make sense for me. And so, John, when I say that, what would you encourage people to think about when it comes to taxes and making sure that they're making the best, right, informed decisions?
And so a lot of it really, Drew, it begins with what are your goal objectives. And so you want to say, where am I at now? Where am I going? And then from there, let's sit down and say, how can you structure change your entities? How can you change your investments? Change your investments. It's interesting to think about this. And so there's really different tax buckets. And so we have taxed always, we have tax deferred, we have capital gains tax, and we have tax never. And so if you look at your assets, this is a very simple concept to think through, and to say, what of those 4 different buckets does my money sit in? Can you simply adjust where you pull income from year to year to decrease taxes? And then you change your investment strategy based upon the income. So, Drew, it's about having a plan where it all works together. Don't singular focus on investments or on risk or on tax or on estate. Bring it all together into one cohesive plan.
Yeah, absolutely. So, folks, we encourage you to reach out to your advisor, have a touch-based conversation with them, saying, hey, how am I doing with that holistic plan? But also, there's some new opportunities out there potentially on the tax planning side of things. So thanks for the time, guys. We look forward to talking to you all soon.